Well, cheers to this lovely consolidation retail trading team. This is Mastro coming to you live from Puppet Show Central with your routine briefing. I left my camera at Puppet Show South, so I will not be able to grace you with my face today, which I think is something that many of you will celebrate. And so I will just be the voice behind the mouse here for today as we do this briefing. I will get a camera going here uh, on Amazon after we finish. I have to figure out what a good camera is. That my trusty Aukey, A-U-K-E-Y, whatever that was, has been with me for some time, so perhaps it's about time for an upgrade there. So yeah, no face today, but I'm here, I promise, and I'm ready to give you guys a great and beautiful briefing from the uh, what do we call this? The mothership uh, office here. I don't know. Whatever. So why am I choosing to the consolidation? It has obviously been a frustrating week to say the least for day traders and especially trend traders. But really, I think at the end of all this is going to be a nice trend move. This has been, at least for my system, the slowest few days of the year so far. And if I look back at the trading log, which you can access on our warm-up documents, I'll show you in a sec, these usually lead to decent trend moves and good trading afterwards. So we're going to cheers to the consolidation. I do have a trade on at the moment for a breakout. I got the signal. It's actually my second signal since Thursday. So second or third, I don't know. It's been, like I said, super slow. And so we'll see if this breakout plays out. We'll look at the levels today. I'm going to go right to the warm-up document now, and we'll see what we got cooking. Okay, so same kind of look from yesterday. It's that up inventory where we moved with the news, and we did have the balanced overnight as they did make a move back toward that low. So balanced up. No surprise in terms of the first 30 minutes. You did have that open auction look, which we've been seeing a lot lately. And just again, we're in kind of a time of balance. That's what this consolidation area is, and we're just waiting for one side of the market to try to push us into a new balance. Not the shoes, but the price levels where we'll see some price exploration in those wider moves. So really the IB range has not been bad today. So you saw that move from the open. It's about 25 points. Now we're kind of up near this 4150 level again. And yeah, I know it looks like we're in the center of the range, and we are in the center of the range, obviously almost the direct center of the range for the week. But really, when we look at the TPO, you'll see that the bulls are trying to make a move here, and we'll see if they follow through. So that's what I'm looking at there with that double distribution. There's a single now right where my stop is, actually, which is really nice. Kind of lines up for a good little trend look if the bulls can pop this high and have some continuation. And we'll look at the levels that are important on that TPO. But really, first, I want to draw your attention to the 18.1 level here in volatility. That is the lowest volatility reading I've had in a while for the SPX. So there is definitely no fear in the market. That kind of remains the theme. And you're starting to see those rotations tighten up a little bit there. So we'll see if that holds. We'll see what happens. I'm not trying to crystal ball it. I'm just looking at these specific levels here. So you'll notice that the levels are getting less and less as well. There's really not too many levels to look at. I'm really more focused on those major SPY levels that we'll look at first in the macro view. But in terms of the ES, so these are ES levels, remember, ES engagement versus SPX expected move. These are the ES levels. Really, that 4110 is the most important level for me on the downside, watching what happens around that overnight low. And then on the upside here, we're currently building some time and volume above 4140, again, lending to that double distribution type look, and we'll see what happens really at the high. So I'm playing for a breakout. Either I'll get stopped out, either the bulls will drop the ball, and we'll go back through 4140, and we'll get that fake break type look, which to me is actually going to be just a close below 41.40 on the 10-minute chart. So pretty clear level there. That'll be a fake break. We'll take that trade. We'll flip it around if that does happen. But until then, I'm watching that double distribution. And let's jump right to the TPO actually first today before we go to the macro look, so you can see what I'm talking about. So this distribution here, as you can see, starts on the 4th. So it's more than a full week of just chop. And really that level there, let me go back to hand tool, that balance there from about 41.50 down to, like I said, that 41.10, that is the chop range, but that's where balance is right now. It's a really chunky consolidation. So we'll see if we stay in it or if we do pop one way or another. So really want to focus on intraday. I don't want to get too tied up on that big distribution, so I'm not going to zoom in too much, but I'm watching this double distribution that's developing with that 33 level being the pivot. So that 33 level is not only the POC for the day, it is also the pivot of the double distribution here. So stand by. I'm seeing we're trying to close back in value here, really close on the chart. So I'm going to go to the switch to execution for at least the next 30 seconds in case the bears can put in this red candle here. Let's go back to the execution chart, show you exactly what I'm watching. So close below this line plus a lower low is going to be that fake break signal for me. Really hoping we don't get that. I do not think on the downside that that fake break look is as strong as double distribution that we're just looking at, but I will abide by whatever signals the market gods give us. So watching this closely here, next 10 seconds. Oh boy, that's a close one, isn't it? I'm going to hold my position here for a little bit. I'm going to tighten up the stop in case we get that. So I'll go to stops here at there and there, and I will flip if those get stopped out. So we'll see what happens there. Going back to the TPO chart, what I'm talking about. Yeah, so I'll get stopped and I will actually be involved on this targeting of the pivot there if they do take us lower. So I'll be watching that closely. But this is what I mean with that double distribution. You saw us move from this area of potential balance up here. You just saw the POC move up live as we were just watching it. So again, lending to that bullish assumption. In fact, I'm going to go ahead and move these stops back down to that 32.75 level, just in case there's a quick little stop run. So yeah, so that's what I'm watching, that double distribution again. I do have a bullish assumption at this current time. If we do pop back down and take out that single and start to fill out there, it's going to change the TPO assumption. But right now, definitely looking at double distribution. So we'll see if that holds. So macro look, just kind of reiterating what I'm talking about on the let's see if I can detach this window on the macro chart here. I need to adjust my arrows. I just got back into town, so everything is not as it should be. So I'm just going to do this live real quick. I'll make it prettier, I promise. Just real quick. So I'm watching these two gaps on the downside, and then there's these two gaps here as well on the upside. I'll make this pretty by tomorrow. But you can see those levels that I'm looking at there. We have pushed into this potential supply zone. We're still pushing into it. So again, I just want to show you that warm-up document. I'm watching these SPY levels. These are the key levels. These are more important than ES levels for me, besides obviously the extremes. Watching what happens around those gaps, and watching right now 41.40, which we are holding. Price does seem to be accepting it, and so we may indeed target higher if we make that higher high. So pretty clean look today. It really is. I know we're still chopping around, but as it stands, I think it's pretty clean. I'm going to clean up this macro chart, but really the major levels to watch are those SPY levels and, of course, these trend lines. It all boils down to me to a breach of that overnight low is probably going to lead to sustained downside. If we do touch 4100 again, I personally expect it to fail. And then on the upside, if we do take out that high, obviously always looking for that fake break first. But if you start to see, I think, even a 10-minute candle close above there and a higher high, that's going to lead to that breakout and probably a move toward 420 on the SPY there. So we'll see what happens on Mr. Macro. Again, volatility still lending leading, whatever the I don't even know the correct verb there. I think lending is the correct verb to the bearish assumption. Let's move this over here. You can see lower lows yesterday. I think we just made a lower low again, and we just made another lower low there. So really all volatility is telling you is it's trending down, no fear. When there's no fear, the assumption is up, especially based on everything else we're looking at. So like I said, simple look. I don't think we need to dwell on it too much. You can access this warm-up document in the description of this video. Just go ahead and click on that. You can see what's going on in Fabio. I have to put in yesterday's results. These are from the day before, obviously, or was this yesterday? I need to check this log a little bit, get my dates going. I've been on vacay, so not only have I not had signals, I haven't been in front of the computer. So I'll go ahead and check this out. But you can see Fabio is much better than Barb. And if you want to check out those mechanics, just go to this tab here and click on routine day trading. I am still kind of working on it, so I'm not going to push it too hard. I mentioned at the beginning of the year a $10,000 challenge. I might up there, or maybe I said 100,000. I don't know. I'm trying to get the correct number. It's going to be based on this max margin right now. So Barb was that expensive one, where is that about 80 grand? This one I'm looking at about 30. So we'll see as that develops. But just if you want to track this, that's cool for now. Check out the mechanics as well. But I'm not really pushing it until I've gone through a third layer of back testing. So I've done 2, and I want 1 more just to account for A, worst case scenarios, and B, any potential biases that routine trader may be putting into those back tests. So yeah, so this document is most important for today, I think, just focusing on those levels, focusing on that double distribution. I want to show that one more time. That is going to be my primary crystal ball chart for the day. Just very simply, even if you just want to zoom in just on this TPO, that is the view, watching what happens around those levels. So if we go back to the execution chart here real quick, you can see that we are getting that move back toward that high, back toward putting me at a scratch after being in the trade for I don't even know how long, like an hour. So we'll see what happens there. And yeah, so that's all for the price action I got for you. The newsletter is going to be out right after this. I'm going to go hang out with my Zoom friends as well. So if you're listening, you're part of that. I look forward to talking to you. It's been a while. But yeah, so please feel free to hit me up in the comment section of this video. Twitter at Routine Traders, my favorite haunt, as they say. And I will be on Twitch today, getting out some of the Rust for that electronic set. So excited about that. And yeah, so please, if you did enjoy today's content, give it a like. That does help with the YouTube algorithm. And in any and all cases, thank you for watching, and stay classy until tomorrow.